Hey everyone, welcome back to Corporate Decoder, the place where we break down the dense language of corporate filings to find the juicy bits. Today we are diving into CleanSpark Incorporated's latest 10K report. Now a 10K is a big annual filing, and this one is packed with enough numbers and risks to make your head spin, so buckle up. And hey, before we get going, if you love getting these straight shooting insights into what companies are really saying you know what to do, hit that subscribe button. Also, you absolutely should join our Discord community, linked down below. It is where the real decoding happens post the video. Alright, so CleanSpark Incorporated, this is their big annual look back for the year ending the 30th of September 2025. They started out heavily focused on Bitcoin mining, you know, those massive computer farms that make Bitcoin. But they are strategically shifting gears. You see, they are building out their data center business for something called AI and HPC workloads. Think of AI as artificial intelligence and HPC as supercomputers for complex tasks. So they are not just mining digital coins anymore. They are getting into the serious infrastructure powering the future of computing. They own a decent chunk of land and power infrastructure spread across Georgia, Tennessee, Mississippi, and Wyoming with a huge contracted power capacity of almost 1027 megawatts. That's a lot of electricity, folks. And they are not stopping there. They are actively planning more and even picked up land in Texas in October of 2025 for a new data center campus. This move into AI and HPC is a big deal because it means they are diversifying away from just the volatile world of Bitcoin prices. Their strategy is to use their expertise in managing power and building big facilities to tap into the booming demand for AI and high-performance computing. They even brought in a new senior vice president of AI data centers and are exploring collaborations with Submer Technologies, a leader in designing and building AI data centers. This is serious business moving beyond just the crypto playground. Now back to Bitcoin mining. This used to be their bread and butter, and it still is a significant piece. They mined about 7,873 Bitcoins in 2025, a slight drop from the previous year, largely because of the Bitcoin halving, the event that cuts the rewards for miners in half. Despite this, they nearly matched their prior year production by expanding their operations, which shows their strategy for growth is working even with that built-in reward cut. They have a massive fleet of miners, over 336,000 of them, and more than 241,000 were actively mining by the end of September 2025. Their miners are pretty energy efficient, averaging about 16.7 watts per terahash. This is important because energy is their biggest cost. And speaking of Bitcoin, its price is like a roller coaster. For the year ending the 30th of September 2025, the price ranged wildly from around $58,900 to $124,500 per Bitcoin. This volatility directly impacts their earnings. They hold quite a bit of Bitcoin to around 10428 Bitcoin on hand and another 2583 Bitcoin used as collateral for loans. That's a lot of digital gold whose value can change by the hour. Now for the financials, for the year ending the 30th of September 2025, their Bitcoin mining revenue jumped to over $766 million, up a whopping 102% from the prior year. This incredible surge was driven by a big jump in Bitcoin prices and them mining more Bitcoin because they clearly put more miners into service. But with great revenue comes great costs. Their cost of revenues, specifically energy and hosting fees, soared to reaching over $343 million, which was up 107%. Their energy costs alone were over $331 million. This shows how critical controlling energy expenses is for miners. The result of all this mining and expansion for the year ending the 30th of September 2025, they reported a net income of over $364 million. That is a massive turnaround from a net loss of over $145 million in the previous year, which was impacted by asset impairment charges. They also report something called Adjusted EBITDA, which essentially strips out some of the non-cash and one-off items. Their Adjusted EBITDA for 2025 was over $823 million, a huge increase from around $245 million in 2024. This shows their core operations are generating a lot of cash. Now about the money they have on hand, as of the 30th of September 2025, they had over $1.3 billion in current assets, including over $966 million in Bitcoin. Their total assets were over $3.1 billion. Total liabilities were around $1 billion, giving them a working capital of over $1 billion. They also recently issued really big convertible notes in November 2025, totaling over $1.15 billion, and used a good chunk of that to buy back their own stock. But it is not all smooth sailing, of course. This is an SEC filing. There are always risks. Their report details a ton of them. They are operating in evolving and highly competitive industries. Regulatory changes are a big concern for Bitcoin and now for AI infrastructure. They also face risks with their Bitcoin holdings themselves like theft and market volatility. Plus, there are risks tied to their massive debt load. Interestingly, they filed an indemnification agreement regarding a lost share certificate for an officer and director. It seems someone misplaced shares worth over $5 million. While it sounds minor, it highlights the importance of trust and paper trails, even in the digital age. Looking at the auditor's report, we can see they dug deep into how CleanSpark recognizes revenue from Bitcoin mining. It is a complex process involving contracts with mining pool operators and valuing Bitcoin at a specific time each day. The auditors spent significant time verifying these calculations, which shows how tricky this area can be. Another key area for the auditors was accounting for warrants they issued related to the grid acquisition. Deciding whether these warrants are liabilities or equity takes a lot of judgment under complex accounting rules. Their property and equipment section shows mind-boggling growth. Total property and equipment jumped from about $1.3 billion in 2024 to nearly $1.9 billion in 2025. A huge part of this is their increased investment in miners, the machines that do the Bitcoin mining. They also had a significant impairment charge in 2024, taking a hit on older miners. So what is the story here? CleanSpark is clearly in a massive growth and transformation phase. They are leveraging their Bitcoin mining success to build out a significant data center business for AI and HPC. The financials for 2025 show explosive revenue and income growth driven by higher Bitcoin prices and increased mining capacity. However, their costs, especially energy, are also skyrocketing and their debt load is substantial. The risks are numerous, from regulatory uncertainty in both crypto and AI to the inherent volatility of Bitcoin. They are placing a big bet on the future of AI infrastructure, using their existing expertise as a springboard. If they can successfully navigate the complex regulatory landscape, expand their customer base beyond just Bitcoin mining, and manage their debt, they could be a major player. But there is definitely a lot of moving parts and a reliance on external factors like Bitcoin prices and future demand for AI computing power. What do you think about CleanSpark's big pivot and their bold expansion plans? Let me know your thoughts in the comments below. If you found this breakdown valuable, please hit that like button. It really helps the channel out. And of course, subscribe for more deconstructions of corporate filings. And do not forget to join our Discord community linked in the description to keep the conversation going. Thanks for watching, and I'll see you in the next one.